Good morning, good afternoon, good evening, YouTube. This is your host, The Cowboy. Welcome to Elliott Wave Cafe, where every 2 weeks we take a look at Bitcoin and Ethereum and we try to make a sense of what's happening into these markets through the eyes of the Elliott Wave principles. So welcome once again. I am your host, The Cowboy. And let's jump straight on. This morning I woke up to a sea of red in here into the markets, and I don't know what's going on. My cat got hurt, her leg. Something happened. She jumped from somewhere, so we had a pretty rough morning here. I've been trying to slip in on a Saturday morning. I was thinking I was going to do this video a little bit later, just kind of taking it easy, but I kind of got thrown into the middle of some interesting price action in here. So I thought, let's just kind of jump straight on and take a look at the markets. So listen, I don't think this decline changes the structure a whole lot. You can see in here, this is the main count that we're having in here that we've been presenting for quite a while. And I'm still continuing to look at this decline here as a second wave into the larger uptrend. As I've been mentioning for the past, few months in here, this wave 2 can continue to develop. There were several scenarios where this wave 2 is not completed. And one of them is the fact that you can still push lower, maybe into a flat move. And, only after that, you're going to push higher into a larger rally. So with the thought that this looks like a three-wave advance into new highs, with the sell-off here now, we're starting to have reasons to believe that this could extend a little bit lower. Does it have to? It doesn't. But it's something that it's slowly starting to creep in and starting to make sense. It's still very, very early. I have a couple of accounts, that are still looking to the upside here, even with this pullback, and we'll take a look at them in a minute. But I just wanted to show you, where we are in the overall structure until you're actually, coming much below this, 2930 level. And even under those circumstances, if this move, let's say, gets aggressive in 5 waves, if you're staying above the top of this channel, you're fine in terms of a longer uptrend here in Bitcoin. So listen, the market threw us a little bit of a curveball. There was a lot of, drama happening into the equity markets over the past, let's say, couple of weeks here, ever since Mr. Jay Powell, the head of the Federal Reserve, starting to feel a little bit more hawkish into the markets. And, he started talking about, reducing, the asset purchases here, maybe into a more rapid pace. Talking of rate hikes coming, sooner than expected. So this put a little bit of a cold shower over on the equity markets, and I was kind of cautioning, our members into the program against, necessarily being too bullish on Bitcoin and in cryptos with this declines into the stock market, because there is a chance that this could kind of spread over into the crypto land. And usually these things kind of held pretty well until, let's say, the end of day Friday, once we got into close. And then, overnight here in the overnight session, at least, up here in my time, the market kind of started to move lower. There was a lot of liquidations, maybe a lot of leverage. And it's normal. I mean, this asset is very volatile. I don't have to tell you, if you're going to enjoy the gains, you might have to enjoy some pullbacks. So, it's part of the game overall. But I think, we don't have a big structural damage looking at the longer term trends. So with that, let's jump over to the next count and let me kind of go back at it. This is the longer kind of 2-week count. So if you look at the, at the longer kind of trends in here, you see that, even with, a little blip, this chart is from November 20. So you can look at the, the other decline here a little bit lower, but nothing really changed into the larger uptrend. So going back to my other count, which is the red count here on, on crypto compared data, I have this triangle that I've been monitoring and just kind of keep it on the back burner in there, looking at it as a, pretty viable possibility. You already know this counts if you've been watching my videos from before. So this can take the shape of, let's say this is a B wave to new highs, will become eventually a running triangle. You're coming back into this wave C, D, and E, followed by a move higher. So if you look at this thing, we've dropped into the 618 of this decline in wave A. That is at about 42,651. So we've touched those levels pretty accurately. Is this the end of the C wave? I think it would be obviously way too small for that to happen. So I have a count that will show you kind of where we are in that sequence, but it's probably just the wave A decline of the C wave followed by a B rise and then another C wave decline if this count, continues to kind of pan out. But, it does make sense. We're still in terms of a time lapse. We still have a lot to go, maybe into the spring of next year until this count kind of moves towards completion, spring to maybe even summer. It would be a pretty choppy environment. But listen, Bitcoin hasn't really done much ever since, we've hit those highs earlier this year. We did sell off. There was a bit of volatility, but overall, we're still kind of flat. We don't have a big trending markets like we've had, since the 2020 spring of 2020 all the way to earlier this year. So that's kind of where we are in this count. I'm going to continue to keep an eye on this. And I wanted to show you something not to scare anybody, and this is maybe something I've talked about in the past. As you know, every single time you make new all-time highs, you always run the risk of being in some kind of a fifth wave because you're making new all-time highs. And the counts, especially, in this asset that's been improving so much for so long, and it had such a nice performance year over year since, 2009, you can start to kind of, look at this thing as asking yourself, hey, what if this is a completed pattern, right? And you have a lot of arguments towards it. Again, it doesn't have to pan out. It's something that I am, looking at as a possibility, and you just have to be prepared that you might enter into a period of, who knows, maybe a couple of years of bear market. Now, you might not like this, you might not agree. I don't say this is my primary count. It's not. It's something that, obviously I have to put out there because, it's something that is, that the market structure shows you that it's very, very possible. So you're looking at this extended wave 1, you're looking at the pullback in a wave 2, you have a wave 3 in here, and then you have a wave 4. And now this move out of here could be a finish fifth wave, 1, 2, 3, 4, and then up in 5, and you're done. 5 versus 3, it's at 618, 78,000. We haven't really kind of got into those levels. We stopped at about 70. When you usually have a wave 1 extension, you're looking at the wave 5 through wave 3 to travel 618 multiple of this wave 1, and that comes in at 112. So we would still have a little bit higher to go, basically to kind of reach those fib levels in terms of how long this fifth wave would continue to travel. Now listen, the sell-off doesn't have to be that aggressive. If you have a completed larger, let's say, super cycle in here in this wave 1, that means that you would go into a big crypto winter in here for maybe at least 2 years, where you're going to go down to 24, maybe until the next halving. I don't know exactly when that is, but you would start to get maybe like a larger ABC in here. You don't have to come all the way back to the $3,000 level. Remember, this is a locked chart, but all you have to do is just to kind of slowly decline and enter into a larger, bigger correction in here. And if this extends, much longer, then this count will start to make sense. Again, it's very, very early. I'm presenting this maybe a little bit prematurely. I don't say this is going to happen. But it is something that, if you want to be fair to the price action, you can argue that this count is possible. So continuing to move here, to the next one, we are still being supported at the 50-day moving average. And, the prices are, sort of respecting these levels. I think the moment you lose the 50-week moving average and you're starting to close below those levels, at least on, let's say, not the first week, but maybe the second week is still going to be weak, and you're starting to break lower, get below this 36,000, I think then that's going to be a little bit problematic. You might move into that larger triangle or maybe even into that larger flat correction. So you really want to hold, from a momentum perspective, you wanted to hold this 50-week moving average, which is kind of at the same level as the 200-day, and rally from here, right? If you're starting to lose those levels, the overall market can turn a little bit more bearish. The institutions, larger fund managers, let's say, that have exposure to Bitcoin are going to tend to reduce that exposure because it's part of the risk profile. So pay attention to this. Let's see what happens. But in terms of opportunities, this could be something really, really good. As you can notice, even from before, you usually tend to get rallies off that 50-week moving average. So the next chart in here, it's something that takes a look a little bit at a lower time frame. And, we were looking for a while at this as being a possible 1-2 out of here with the larger impulsive move to the upside. And, we kind of starting to fall apart in that, in that assumption. So you obviously have to adjust as a market participant. The other count that kind of lingered there for a while, and I think I've talked about it a couple of weeks ago, was that it probably, it was starting to have the look of a flat correction in this kind of ABC move. And I started to caution my members as well, not soon after we kind of made this low, that I think that this count is starting to lose a lot of ground and I can't really stand on it anymore. And I started to make modifications to it because it started to look, quite disproportionate with this wave. And it was, just kind of forcing the market into something that it wasn't really responding and necessarily really happening. So the way we kind of continue to stay bullish on this count is by kind of, adjusting the count, going in an impulse in a 1, 2, 3, maybe a small fourth wave in here, followed by a finished up move in the fifth wave to new all-time highs here at 69. And now you're getting more of an A, B, down in C correction into the 618 for a larger second wave. You combine that with the 50-week moving average, with some support levels kind of coming back in a horizontal zone. You're looking at this X wave, you're looking at this area, you're looking at these zones. So somewhere above 40,000 into the 618, could at least give us, even if it's not a long-term rally in here, at least a move to the upside, maybe back towards 55 to 60,000. So on the smaller time frame, I'm going to continue to monitor this, see what happens through the prospects of a 1-2. Now, if you wanted to trade this from the long side, you would have to be patient. Put your stops below 30K. And, it's a large stop. So depending on, if you're using leverage or not, or if it's just a kind of a spot buying, in terms of a trading mechanism in here, if you want to, let's say, enter with half of a position and then see kind of how the market behaves, you can continue to add to that position. If you're starting to break lower and you're starting to come, let's say, below 35K, even below this 39, then the second wave will start to kind of look a little bit problematic. And then you say, fine, it's not a second wave. Things are starting to kind of look a little uglier. I don't think it's going to pan out. And then you just kind of get out of the market. The next one in here I'll come back to that, is, the larger count that I've showed you previously on that kind of triangle perspective, where that's a wave A decline. You're moving up in 3 waves in this ABC, and you're starting to kind of sell off in more of an impulsive move to a 1, 2, 3, 4, and 5. You're only completing wave A, so you're still expecting a rise here in this wave B. We'll see kind of how fast this move will happen. Even if this move is not done and you're going to make one more low, let's say into 40K, it's still going to be followed, I think, by, a rise here, either as a 3-wave move or as a 5-wave move, and then, you'll adjust. If it's a 3-wave advance, it'll probably be a B wave followed by a C wave, and that's going to be kind of your reason to get more confidence into the fact that this will be a sideways triangle. So, I've talked about this with our members as well. It was one of the counts that were kind of constantly brought up into my daily updates in there. And, now it starts to look like it's something that is probably going to pan out in here in this, let's say, 5-wave impulsive move up in B and then down in C. But listen, nobody really knows the future. So all you got to do is just kind of adjust and take, some kind of an opportunity when they present themselves. And down into these lows, you're starting to have something to work with on a shorter term basis. Let's say even looking for a rally back here in this B wave or the beginning of a larger impulse higher. So it's something that I'm definitely watching. Again, this is the time fib at the bottom here, from equality with the wave 2 that you're not seeing here, from 161.8 distance traveled in this kind of 4th wave right there compared with the 2nd wave. So keep an eye on time fibs every time you have a 4th wave to kind of give you an idea of what's happening. So you can see we're not scared about these moves. We're just looking at the markets through the eyes of the wave principle. I know could be at times a lot of confusion into the wave count, and again, I've done a video where I've talked about, why is it so important to constantly, have backup counts, things that necessarily don't surprise you, and your confidence or your lack of increases and decreases based on what's happening on the charts, and you can adjust accordingly. And I'll show you something here interestingly in a second, kind of what we've done into the program regarding that thought process. So going back into the next slide, I'll show you here. We've talked about this a couple of weeks ago as well, and back then I didn't have the the 10-year yields on there. But basically what I'm watching through this kind of overlapping charts and kind of multiple asset classes in here, I'm watching Bitcoin as a risk asset overall, and you can see it's kind of climbing and falling together with the rest of the risk assets into this market. And obviously one of them is the S&P 500, which is the largest market in the world. Then you have the copper, which is another kind of proxy for risk if you're thinking about how market kind of judges where we are in the growth and economy overall on the globe. And then you have the 10-year yield, which is, a very important, let's say, trigger for risk and proxy for risk as well, along with copper, along with S&P 500, because when people, when market participants see risk coming into the market, they will tend to, buy more bonds. When you buy bonds, the 10-year will sell off. So, when you run to safety, you're probably going to get a sell-off into the 10-year, to the 30-year, to the, all the way along the risk curve. And I'm not going to get into the big discussion on bonds and stuff like that, but it is something that it's important to watch. So you can see here, that the yield sold into the 135 right now from 160 previously. And then you saw copper selling into the 427. And, we were watching this couple of weeks ago on my latest update here, as the S&P was somewhere up into these levels, Bitcoin was already selling off, and we weren't sure what's going to happen here. Either Bitcoin is going to move higher, or the S&P was going to start to respond and kind of catch up to Bitcoin. And you can see how now they're kind of, the correlation continues to kind of show, how tight they kind of move together. So you see here, Bitcoin, selling lower, the S&P 500, although not that aggressive just yet, right? It's still kind of holding strong because of some of the larger stocks that are still holding the market higher. I talked about this into the daily videos, but it is a market that you kind of have to pay attention of now that Bitcoin is a $1 trillion asset class. It's going to start to trade more as a kind of macro asset. It's going to be very, very tied with what's happening in the rest of the market. So let's not look at it in a vacuum. It's not a super independent asset class that does, whatever it wants. It's very, very well correlated with the rest of the market. So right now we seem to be, in a period of risk off. It's still very early into this month. We could turn from here and, get that, kind of, let's say, wished Santa Claus rally maybe towards the end of the year. We'll see if that happens. But for right now, the markets are in a bit of a retreat. And, the S&P 500 tried to close lower on Friday, but in the last kind of half an hour, they pulled the markets aggressively higher. It could be that we have found a low in there. Combined with the Bitcoin sell-off over the weekend, we might have a nice week next week. So it remains to be seen. But that's kind of what I'm seeing, and the reason why I wanted to show you that. Now, here I'm at the middle of my presentation today. I want you to kind of take a look at what we're doing. I'm going to plug our program here a little bit and see what we're doing. We have daily video updates. We're covering Bitcoin and a bunch of alts in there. Every single day we have a charts channel, an alert channel as well. We take a look at stocks, we trade options as well. We have a pretty busy chat room and people come in and present, kind of charts and discussions, and I'm pretty active on there as well. There is an Elliott Wave course channel in there as well. And recently, for about a couple of months, we started to do weekly live streams. So every Thursday, we're jumping on and for about an hour and a half. Sometimes we go up to 2 hours where guys come in and we ask questions and I answer and I take a look at the, different altcoins, and we talk markets and macro, and it's pretty, very fun. So you guys should try it out and kind of see how you feel about it. And, I guarantee you spend with us, a few weeks in there and you'll walk away with a lot of market knowledge, not just Elliott Wave, but macro in general. Here is what I also wanted to show you pretty quickly. Is one of the latest trades that we've took was something that I think we entered on November 28th, which was a few days ago. So this decline here, we were looking at it as either as that C wave of a flat or maybe a second wave pullback, and we're starting to notice that we're running towards the end of that correction. And I've alerted my members here, through an BTC trade alert, open long at this level, good support, very small risk on this trade. So stops were below 53. We entered at 53,650, and shortly after we opened that long, the market, caught people short in here, and we started to squeeze higher. We took a little bit of a profit here, about 25% of an entire, let's say, trade positions that we opened back here. And then we wanted to see if we could actually rally, because the idea here on this trade was that this was a completed move. This was an impulse off the low. And then we were going to be able to maybe add to the position on the pullback and look for a move higher in a 3, 4, and 5 and see if we can actually, extend this trade much, much longer. Now, here is what happens in markets, right? You're thinking something is going to happen. It actually doesn't. And, the market starts to morph into something else. So that's exactly kind of what happened here. And into the daily video updates I was doing, I talked about this, going like, listen guys, this trade is not really moving the way I would like it to move. Something else is happening. The structure in here is starting to get really bit messy. We were getting, sell-offs into the S&P 500, and the markets were feeling heavy. The Bitcoin did not really respond, but did not rally either to the upside. So, based on, that type of price action and, market knowledge and experience, I've decided to close this trade. And I said, listen, I think I'm going to get out of this thing because, we have many chances to kind of get back in, but just be safe, step to the sidelines in here and just kind of let this market breathe a little bit and just see what happens, because it's not doing what we're supposed to be doing. So, not being stubborn onto a trade and accepting the fact that, it's not doing what you think it was going to do. It's, to me, in my view, it's as good as being into a winning trade, and it proves, that you're growing as a trader, that, you're having reasons, on your trading methodology when you kind of think that way. So anyway, we got out of here with about, with the rest of the position. So 75%, this was just a quarter, so 3/4 out. And then we stepped to the sidelines, and sure enough, we've gotten this big sell-off, which saved us a lot of aggravation. We were probably going to get stopped out at break even no matter what, but at least this way we were able to capture still, quite a bit of profit. So we sat here closing BTC long position in December 1st, exited about 56,580 for about 5.5 gains on that kind of latest leg of the move. We've also done some oil trades. We're doing some currencies, and, we have different, trading different, let's say, assets in there all the time. So you can kind of come join us, and you can see kind of the way our kind of live trades channel works on there. So, right, let's jump over to Ethereum. And I didn't modify this a whole lot. I mean, this is from November 20th, so from a couple of weeks ago. I don't think there's a lot of technical damage in Ethereum, that kind of requires me to change this in any way. In one of the, let me just kind of go back. In one of the charts that I don't necessarily have here, I was looking at this wave 1 and kind of cautioning on, hey, what if this wave 1 here, it's not done just yet? Kind of go back. I was trying to kind of grab my marker. Give me a sec here. There you go. And, I'm like, hey, what if this is still maybe like it was a 4th wave and a 5th, and this wave 1 terminates here, and I'm still, doing maybe a second wave back in here. So that's possible. It's still something that I'm kind of watching. But this wave 2, it's pretty large, and it's kind of, kind of the largest sell-off that we've had into this advance. So that's why, I prefer this being back here rather than thinking that it's probably going to develop a little bit more. It is possible, and I'll be ready to switch, if this move kind of sells lower like that, then we'll probably take this and shift it over. So it's just kind of something that I wanted you to see. But in terms of the larger kind of advance here, I think we're in a pretty clean uptrend, and things should continue to look good for Ethereum. And if you look at the Ethereum Bitcoin cross, that breaks higher, which I'll talk about it in a second. So the next count here is that triangle that kind of, it's a similar story like I have in Bitcoin, where this is, and this again is from November 20th, but a three-wave decline in wave A, you're looking up in B, part of a running triangle, maybe a wave C in progress in here, followed by a DE for the fourth, and then a push higher. So I'm not going to spend a lot of time here. It's pretty much similar with the count that I have in Bitcoin, where we're looking for more of a move sideways in these currencies rather than something aggressive to the downside. The next one that I have is something that I've introduced into my room a few days ago, and this is something that it kind of draws my attention more and more because of the shape of this advance in here. And thinking that this is still a second wave pullback, you know, and this kind of thought came from me from thinking of this as maybe a fifth wave at a larger degree in terms of an ending diagonal, right? Just like I showed you in that kind of yellow count in Bitcoin. Hey, what if this, you know, cryptos are going to enter into a much larger, let's say, crypto winter, and this is a finished move in Ethereum? How can you kind of count that? And, you know, you can't really go at it as an ending diagonal because of the impulsive nature of these moves and because of the lack of overlap. Now, you know, with the fourth wave, with the lack, not necessarily the lack of overlap, but with the lack of this impulsive moves here looking as an ending, right? Because basically what I'm trying to say is that in an ending diagonal, each leg, the 1, 3, and 5, they have to be zigzags, or combination of zigzags, right? And this is not what's happening in here. We have more of an impulsive move, so this kind of leads me to believe that this could be a leading diagonal due to the fact that we're having some overlap. So go in a 1, 2, you go in a 3, we're coming here down in a fourth wave, which, you know, we've had via the sell-off. Let me get the marker again, if I can. Here we go, right? I think this move kind of came lower overnight, so this would be your 1, this would be your 2, this would be your 3, this would be your 4. One more push higher here in this fifth wave, a very small move. This completes the leading diagonal, and then we're selling off in this ABC for a, all right, now I screwed it up. Let me go back, see if I can. There you go. I'm sorry about that. But that would be kind of your second wave decline, and this would be a nice kind of pullback to buy it into, maybe back towards these levels, and then look for a much, much larger rally, let's say, next year after the spring or something like that. But it's something that I'm definitely kind of starting to watch. So Ethereum looks, you know, looks kind of interesting on the smaller time frames because you're having actually a nice three-wave setback into a 618 zone off this impulse. So I still have to consider it as being maybe a second wave at a lower degree when you're looking at this as a 1-2, another 1-2 in here, and see if you can climb back higher. So you can see kind of both of these. You know, this one and this one are calling for a move higher in Ethereum. The only one that's more bearish is this kind of triangle idea where you're, you know, if you're starting to come more in a, let's say, 5-wave decline here in a 1, 2, 3, 4, and 5, then that, you know, starts to tell you, listen, I think you're running into the kind of larger wave A of that triangle in an A, B, down in C, and that's A, that's B, that's C, D, and E, and then you push higher. So for right now, you know, it starts to look interesting. I think Ethereum, based on this, it might make new highs. So keep an eye on that. That's something that I'm watching. Here is the Ethereum Bitcoin cross. This is November 20th when we looked at it, and you know, we've talked about, I think it's very likely here, because this looks like a completed pattern, that we're going to kind of break up higher to the top of this channel, and Ethereum will continue to benefit. And then, you know, just a few days or a week later, we started to break higher. And, you know, you can kind of see this in the price of Ethereum. The alts, you know, are not necessarily responding. You know, I'm not going to go in details here regarding the alts, but, you know, some of them have gotten pretty damaged overnight. And, you know, there are some interesting opportunities in there as well that I'll talk to my members, I think, on Monday, or maybe I'll do a video on Sunday about it. But it is, you know, it is interesting to see how the cross continues to benefit Ethereum in here. Now, if you look at the longer structure, are you maybe running into a fifth wave in Ethereum? It's possible. This move in here was a very sharp, so it could be considered a second wave. This was kind of a sideways triangle. So Ethereum might have a little bit more to go. You know, maybe you can go all the way up to 10. And then you might be getting a little bit of a pullback, which will benefit Bitcoin going forward. But it's something that we'll keep an eye on. So guys, we've come to the end. Thank you again for being here. Please subscribe and like this video, share it with all your buddies and friends, and spread the word about Elliott Wave Cafe. Come join us into the room. There is a public chat in there. I'm not super active. I've been focusing a lot on the premium room lately, and we're just super busy in there. And this is the link that can take you there. There's also a link below the video. Visit me on Twitter at Elliott Cafe for any questions. I post charts on there as well. So again, just to remind everybody, Elliott Wave, it's a beautiful tool. It's not perfect, but it does give you a lot of market awareness. It lets you know where you are. It protects you. It helps you kind of understand what's happening in the market overall, and I think it gives a pretty nice perspective overall, and helps you a lot grow as a trader. So give it a try. I love it. And again, thank you for being here, and I'll be seeing you in a couple of weeks, if not maybe in the room. So have a nice rest of the weekend. Bye-bye.